cap of $4 trillion. To say that it is bigger than the annual output of a country the size of Japan. Let that sink in, guys. That's how a single company is. And Japan is big. Japan is huge. It used to be the second biggest economy in the world. Now it is fifth. But take a look at this, guys. One company, one AI company, one graphics card company is bigger than an entire nation of Japan. That is unreal. That is unbelievable. And you have to give credit where it is due. That's what I wanted to cover, the first thing. And I think it's amazing. We should all take NVIDIA as an example on how, things are done and how to do the things when they are in a trend and how to capture a trend. And there's lots to be learned with NVIDIA story. So hopefully I'll do another session just to talk about NVIDIA and how they were at the right place at the right time and how they captured that trend. Investing career, I sold my NVIDIA share that I bought all the way back in 2001, 2002. And I forgot about it. I had like a few hundred shares and I totally forgot about it. And in 2018, I looked up and said, oh shit, man, these shares all of a sudden worth, 100 times more. And I didn't even do my research. I just got greedy. I'm just telling you guys what happens when you get greedy and do not do your research as to how badly it can freaking hurt you. At the time, I was happy. I made a couple of 100,000 by selling those shares, only to realize if I had kept even half of them or even fourth of them, those shares would have grown by over 100 times. That's how, and I would have retired easy by now. That's how bad that decision was of mine, and I'm beating myself up for that. I was for the longest time, and I just kick myself every now and then. I think about it, but it's a lesson learned, and it was an expensive one, but lesson learned nonetheless. Anyways, that said, when I saw that NVIDIA thing reaching all the way to $4 trillion, I thought, I'll bring it up on our lives and maybe give you guys something to think about. How a company can get bigger than countries. That's amazing. That has never, ever happened in the past. Never, ever, guys. NVIDIA is 1/4 the size of US GDP. Imagine the size, guys. Quarter the size of US GDP. Bigger than the state of California. Almost as big as India. It is something to take a step and think about, like, how can a company get so big so fast in a matter of 4, 5, 6 years? Anyways, that said, let's talk about what's happening in the tariff world. So Trump, on one hand, he comes out and says, hey, I'm going to delay tariffs to August 1st. But before he does that, he said, hey, whoever doesn't have a deal with us, I'm going to send them a letter with a predetermined deal that I think is going to be the best for that country and the U.S. Trade relationships. So on one hand, he's saying the deal is postponed, the deadline is postponed till the 9th, so 1st of August. On the other hand, he's sending out letters. And on the other hand, he's saying there's 50% tariff on copper. And how stupid do you have to be? I'm going to talk about that. So he's confused. Either is he doing by design, or is he that stupid by confusing markets, by creating chaos, as he predicted that he would do in his election promises and also in the book that he wrote, The Art of Deal. That's not how you run countries, guys. You have a joker running the world, joker running the country. He's turned everything into a circus. That's exactly what it is. He's turned everything into a circus. So let's look at copper. That's the first thing I want to look at because it's going to tell a story of something very, very significant. And I'll tell you why copper, the way it's going and the way, let me bring up the chart and it'll tell a story, guys. Okay, guys, 1 second. Here we go. So let me bring up copper XCU USD. Here, guys, you are looking at a weekly chart of copper. So every candle, every bar that you see denominates a week. So now you're looking, this is going back all the way back to 2002. So 2001, 2002, at the turn of the century, the copper was sitting at 67 cents. Okay, why is copper so important? Copper is the most important commodity when it comes to construction. Your cabling. Because a layman, a normal person will only know that, hey, copper is needed for cabling. It's needed for a lot more than cabling. Copper is needed for all the circuit boards, your phone, your computers, your servers, all the industry, the cars, the buses, the trains, the airplanes, everything. Any place you see a circuit board, you need copper, you need silver. And the price of copper has gone tenfold, the 10 times over the period of 25 years. But more significantly, from the period of, say, 2023 till date, right now, copper is sitting at $5.52 a pound. So in last 24 hours alone, it has appreciated by 10%. Imagine, guys, copper is the second most important commodity after oil. So a commodity such an important one as copper appreciating 10% in matter of a day because this idiot Trump wants to impose a tariff. He's already imposed a tariff over 50% of copper going into the US. So what that does, he doesn't realize it's going to, if the base material, if you are building a car, if you're building a phone, and the material needed the most is copper to build the circuit boards, the prices have gone 10 times in the last 20, 25 years, 3 to 4 times in the last 5 years. What do you think, or what does he think the price of the finished good actually go down or will go higher? Of course, it's going to go higher. And do you think manufacturers are going to eat the cost? No, they're not going to eat the cost. They are going to pass it on to you guys, to us, to consumers. That's how it's going to do. And what is it called? It's called inflation. So everything, every electronic, you're building a house, you need copper. You're building a factory, you need copper. You're building anything, you need copper. Anywhere you need copper, which is pretty much everything and everywhere, the prices are going to rise. Inflation is going to rise. That is baked in the cake. Now, how do we fight against inflation? We go after hard money. Again, what is hard money? Hard money is that what governments cannot print. Hard money is gold. Hard money is silver. Hard money is platinum. And I spoke about platinum at length the other day, and we will cover gold and silver also. But I wanted to, for today, what's breaking out is copper. And unless Trump rolls back, unless he goes back on this tariff thing, it's not going to be good next couple of years when it comes to inflation. And also, he's putting tariffs on phones coming in from India and China. Now, the copper prices are gone up for everybody. Now you have copper, premium, and you have tariffs. What do you think is going to happen to your iPhone? It's not going to cost you $1,200-$1,300. It's going to cost you $3,000-$3,500. Imagine that, guys. A smartphone costing you freaking as much as a motorcycle. That is absolutely insane. So that's where things are going. So better prepare yourself when it comes to inflation. Put some hedges up on, buy some protection, buy some gold, buy some silver. That is going to protect your purchasing power. If you don't time these kind of things. If you don't have any gold, I don't care what the price is. Buy some now. If you don't have any silver, I don't care about the timing. Buy some and buy some now. Okay, that said, let's go look at what's happening to our favorite, my pet, guys, dollar. Let's see what's happening to dollar DXY. All right, guys. So right now it's sitting at 97.55. Okay, so this is a weekly chart. Let me bring it back to a 4-hour chart so it'll give me a better picture into it. Okay, so so right now, the trend in the very, very short term is high. Okay, I earlier said a couple of days ago when I was live, the key level to watch was 97.50, and it broke out of that 97.50. Now it's going back and forth, back coming, testing, getting a bounce back, coming back, getting a bounce back. But the trajectory I'm talking very, very short term, is high. So let's chart the path, which is higher highs, higher lows. Again, higher highs, higher lows, higher highs, higher lows, higher highs. So I don't know if this is a low or not, or if it's going to go further low. Now, if So for it to remain bullish, it should not be breaking 97.20. So right now it's sitting at 97.55. If it breaks 97.20, it's not going to be good for the dollar. That is the key number that it must hold, which is 97.20. As of our trades, everything is hedged. We are not picking any directions yet. Not yet. We are not too far. Let me remove this. Let me remove this drawing. Once we go, say, once we are getting to, say, about around 99 level, 90, between 98 and a half, 99, that's when we will start taking off some of our hedges. That's where we will start putting some bullish positions on. If that does not happen, and if it keeps going further, we are going to wait it out. So that said, that's the latest with the dollar as I see it. So if I quickly look at EUR USD, okay, so right now sitting at 17.14, hasn't done much in the last couple of days. It's just kind of going sideways. But the trajectory is low. It's making lower highs, lower lows. Again, just the opposite of DXY. But the key here is this trend line that is already drawn, that started the month of February at 102. That is still intact. So that trend line needs to break, and that's going to be around 116 and a quarter, 116.10. So once that breaks, I'll have my confirmation, because that is going to coincide with Dixie or DXY 98.5. So I'm watching that very, very closely. So that said, we wanted to cover GBP USD. So let's talk UK. Okay, before we discuss GBP USD, I wanted to talk a couple of minutes about what UK's economy is doing, where they are headed. In one big sentence, UK economy is a royal mess, absolute mess. Let me bring this up. This is their inflation, month over month inflation that we are looking at. Look at the trend, guys, starting from last year, May. 2%, 2%, 2.2, 2.2, 2.3, 2.6. If you go look at from left to right, inflation is not easing, it's going up. But on the other hand, central bankers are easing and not tightening. So when you are easing into inflation, when inflation is going up, you exacerbate it. You make that trend even stronger. You make inflation worse, because now you're making monetary policy easier. You're making it easier for people to borrow, or you're making it easier for people to lend. It is going to stimulate the economy, but it is going to increase inflation, and your currency will take a hit. Now, currency pairs, Forex trading is a relative game. Now you have to see which currency is going to take a hit against. Is it US? Is it Euro? Because you have a lot of headwinds when it comes to GBP, or talking about the trade relations with the European Union and UK. Because things are not all happy. Things are not all hunky-dory. There are a lot of frictions when it comes to trade relations between EU and Great Britain. Things are not good at all. There is a working trade in relationship. There is a trade deal, but it's in major favor of the EU and not in the favor of UK. So that's another thing. Inflation is high. Trade deals are not that good. Even though they have a trade deal done with the US, it's still not good enough for their economy going forward. In all likelihood, they will be getting into a recession later this year. And more than that, they have a political turmoil that is going on. The Labour Party is not liked at all. They're not liking the policies of the Labour Party. There's a lot of immigrant issues that are going on. There's almost like borderline civil war in certain cities in the UK. So there's political turmoil. There is a lot of upheaval with the citizens. There's a lot of racial tensions, a lot of religious tensions that are going on. So that said, I just wanted to give you guys a preface of where things are headed with the UK, and let's look at GBP USD chart and see what picture that paints for us. All right, so let me see GBP USD. Okay, It's a little stronger today. Again, it's mimicking what the EUR USD is doing. What I want to do is I want to take a long-term view of GBP USD. I want to see how it's looking in a multi-year or multi-decade time frame. So let's make this chart into a weekly chart. So every candle again is a week, and let's go back and zoom all the way out to 2008. Okay, guys, shouldn't take a rocket scientist to look at a chart and see that, hey, the trend starting 2006, 2007, where GBP was sitting at over 2 to 1. Okay, guys, the trend for the last 17 years is lower. So gravity is in effect. And these kind of trends that are running 17 years, 20 years, they do not reverse that easily. Something major has to shift for these kind of trends to swiftly to change direction. So I stay in the camp that even though the short-term strength is in